New to finance? Stay right here, because this week, something big just broke in the global economy. For years, the world's central banks moved like a perfectly synchronized orchestra, same goal, same rhythm, same playbook. Now, the conductor is gone, and everyone's playing a different song. The Fed is cutting. Europe is talking tough. Japan is hiking for the first time in decades. China is fighting deflation. This isn't noise, it's a regime shift. In this explainer, we break down why global monetary policy is splintering and what it really means for markets, jobs, and your money. Want the deeper story, risks, and scenarios markets are pricing right now? Listen to our latest weekly market podcast, running now on the channel. Available in English, French, German, Spanish, and Italian. Stay sharp, stay ahead, subscribe, and let's decode the markets.
Welcome to The Explainer. Okay, so this week, the gears of the global economy really shifted. The world's top central banks, the ones that have been moving in lockstep for years, well, they've stopped singing from the same hymn sheet. They're all going their separate ways, and it's happening fast. And that's the big question, isn't it? For so long, it was like a perfectly rehearsed orchestra, everyone playing the same tune to fight off inflation. But now, it's like the conductor left the stage, and every musician is playing a completely different song. So we're going to dive in and figure out why this is happening, and more importantly, what it means for all of us. All right, let's start by just framing this whole thing, because what we saw this week, well, it really feels like the end of an era. And look, this isn't just some catchy headline you'd skim past. It signals a really fundamental change in how the global economy is going to be managed from here on out. The rulebook is basically being torn up and rewritten as we speak. And this right here, this just lays it all out, doesn't it? That unified front, it's completely fractured. After all those years of having shared goals, each major central bank is now kind of forced to choose its own adventure, dealing with its own unique problems at home. So let's make our first stop in the United States. The Federal Reserve made a move that, yeah, everyone saw coming, but the way they did it and the reaction to it revealed some serious cracks under the surface. So the Fed cut rates for the third meeting in a row. Wall Street totally called it, no surprise there. But the real story, the fascinating part, is what's bubbling up behind the scenes. There are some serious signs of trouble that this one rate cut doesn't just magically fix. I mean, just look at the market's reaction. It was completely split down the middle. On one hand, you had these rate-sensitive small-cap stocks just soaring to record highs. They absolutely loved the idea of cheaper money. But at the exact same time, the big tech stocks took a dive on fears that maybe, just maybe, the whole AI boom is starting to lose steam. And here, this is where it gets really telling. 3 Fed officials actually voted against the decision to cut rates. Now, that is a huge deal. It is the most disagreement we have seen inside the Fed in 6 years. It tells you that even the experts at the very top, the people in the room, can't agree on where the U.S. economy is actually going. And you can see why they're so divided when you look at these flashing warning signs. So even though they cut rates, you've got jobless claims spiking, fewer people quitting their jobs, weak news from big tech, and falling oil prices. The Fed is cutting, but the economy itself is sending these wildly mixed signals. Okay, now let's hop across the Atlantic, where the story gets even more complicated. We're seeing this massive split between the Eurozone and the United Kingdom. And it's so important to remember here, the UK has its own central bank, the Bank of England, and it is charting its own very different path. And this slide just captures that tension perfectly. You've got the European Central Bank, which handles things for the whole Eurozone, talking tough. They're actually hinting at potential rate hikes to stamp out inflation. Meanwhile, right next door, the UK is facing the very grim reality of a shrinking economy, a potential recession. This table really breaks down for you exactly why they're on such different paths. The ECB's president, Christine Lagarde, she sees enough strength to actually talk about growth upgrades, so her big worry is inflation getting out of hand. But the Bank of England, they're staring at a shrinking GDP and a housing market that's basically frozen solid, which forces them into a much more defensive wait-and-see mode. All right, let's head over to Asia, where this whole divergence thing gets even more extreme. We're talking about 2 economic giants that aren't just on different paths. They're literally heading in completely opposite directions. So get this, for the first time in what feels like forever, Japan is getting ready to actually raise interest rates. This is a monumental shift. After decades, and I mean decades of ultra-low rates trying to fight off deflation, the Bank of Japan finally feels confident enough that wages and prices are growing to change course. At the exact same time, China is fighting the polar opposite battle, deflation. You can see it right here. Producer prices, so what factories are charging for their goods, have now been falling for 38 months straight. That is a massive headwind for Beijing as it tries to get its huge economy growing again. So, what does all this mean? Where does this splintering of global policy actually leave us? Let's take a look at the key risks that are probably going to shape the next chapter of this whole divergence story. You're going to want to keep your radar on these 5 things: a surprise inflation number out of the US, a newly aggressive ECB, Japan's historic hike causing ripples everywhere, more weak data out of China, or an official recession call in the UK. Any single one of these has the power to swing global markets in a big way. So, this great divergence, it means much higher stakes and a whole lot more uncertainty for everyone. And the big question we're all left with is, as these powerful central banks all decide to go it alone, who's going to get it right? Whose strategy will actually end up being the winner?
If you found this breakdown useful, hit like and share it. It helps more people discover MacroNav. And if you want more clear, no-nonsense explainers on global macro and finance, make sure you're subscribed. Stay ahead, stay informed.